Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Fighting back, the EU targets Boeing aircraft, cars and bourbon in a list of countermeasures against U.S. tariffs, covering $84 billion in American goods. 50-day deadline. President Trump threatens 100% tariffs on Russia if Vladimir Putin fails to agree on a ceasefire deal with Ukraine by early September, while pledging fresh weapon supplies to Kyiv paid for by NATO allies. And in a surprising U.S. reversal, Nvidia says it will resume sales of its H20 AI chips to China after receiving assurances from Washington on export licenses. It has just gone 8 a.m. across the Emirates. I'm Jumana Bersachi in Dubai, and we are coming off record highs once again for Wall Street, with both the S&P and the Nasdaq reaching those record closes, and a big couple of days coming up in terms of earnings season. Kicks off today. We've got some of the major banks reporting, the likes of JP Morgan, Wells Fargo, and Citi later, and of course that U.S. CPI inflation print to watch out for. The expectation is we will see a slight uptick both on core and headline on an annual basis. So that is where the market is at. And of course, you can see behind me S&P futures leaning towards the green as well, up about 9 basis points, 25 basis points for Nasdaq too. Euro paying close attention to, of course, with the latest salvos that have come through on the tariff front. The EU now preparing a list of countermeasures on a list of goods that they plan to target should the U.S. go ahead with that 30% tariff. But of course, a lot could happen between now and that August the 1st deadline. But Euro reaching a bit of a ceiling here as investors start getting concerned about the growth impact these tariffs could have on the continent. And then Brent has slipped somewhat in trade. We were through $70 yesterday in trading, down about 0.4% today, $68 handle, $69 basically. This after President Trump did announce that he would be considering applying secondary sanctions to Russia, but not imminently. He's giving them a window to agree to terms of a ceasefire with Ukraine. So on the back of that, a little bit of the geopolitical risk came out of the oil complex. Now, another part of the market that we've been observing very closely is this steady climb higher that we're getting in yields. And by the way, not specific to any particular market. Long-end yields have been rising in Japan, in Germany, in U.S., and this as the markets perhaps come to term with more fiscal premium and the potential for the inflationary impact from tariffs, in addition to questions around long-term funding costs for many of these sovereigns. So this has been a big theme for markets, which actually is a nice segue to our friend David Inglis, who is standing by in Hong Kong. And David, hey, you and I were chatting a little bit offline about some of the financial indicators that you've been watching, but of course so much attention this morning on those long-end JGB yields. We're getting close to 5%. Who would have thought in some of those off-the-runs?
Yeah, I mean, if you told someone that we'd be at these levels as recently as last year, they'd be calling you crazy and you're banging your head against the wall. But here you are. If you didn't take a position, you're probably banging your head against the wall right now. But that said, right, so you have some key inflation numbers coming through on Friday. To your point, it's just not a Japan story, although there is an element to the idiosyncratic nature of the Japan story as it pertains to fiscal health, certainly rising inflation. You have an ex-BOJ advisor now talking about the odds rising for perhaps a hike in October from the BOJ. At these levels, the chart you showed was a 30-year yield. At these levels, that's at a record high. We touched that this morning in the Asia-Pacific, highest since the inception in 99, the 20-year yield highest since 99 as well, and the 10-year yield highest in 17 years. We're still about 17, 18 basis points away on the 40-year yield. But as you can see, it's still clear steepening of the curve across the JGB space. Right. We'll leave the story there for now in Japan. The other bit of news across the Asia-Pacific, and let's change the page, please, is the equity market, which at one point this morning was up 0.6%. We're up now, and as you can see, we've reversed almost all of that. That was the initial Nvidia boost, which to some extent is still playing out across some of the tech plays in the region. Volumes are still picking up on that very note. The other story, I'll end on this before I toss it back to you, data out of China. A beat on almost everything, with the exception of retail sales and property developers are underperforming today. Housing prices remain a key sticking point to the recovery story there. So we'll leave that there for now. Jumana.
Yeah, but headline GDP numbers slightly higher than expectations. David Inglis in Hong Kong, thank you so much for the Asian market overview. Now, the European Union has finalized a list of countermeasures to target U.S. goods worth $84 billion, including Boeing aircraft, cars, and bourbon. For more, let's bring in senior editor John Herskovits. John, the EU now has had some time to digest the letter that was sent to them over the weekend. What does this latest list tell us about the prospects of the two sides reaching a trade deal?
It indicates that the EU sees this as something that's going to be prolonged. This is for a countermeasure. It's a broad array of goods, as you mentioned, the Boeing aircraft. There are also chemicals, there are agricultural products, musical instruments as well. And the EU is bracing for this to be a protracted negotiation. And they've gone into this looking for something that a normal trade deal where it's win-win, but they've seen the goalposts shifting with this 30% threat that's been made, and this list of products shows that the EU is kind of skeptical that something can be done in the short term, and they're looking at something much more longer term in terms of the U.S.
Yeah. I mean, you speak about this longer-term trading picture between the EU and the U.S. Can the EU and other major economies diversify trade on back of these tariff threats from Trump? Is it possible? Have they started looking into alternative export markets?
Yeah, no, we've seen some of this. We had some reporting from Bloomberg that the EU is looking for some sort of engagement with Canada and Japan for trade. The EU is accelerating its trade talks with India. They've reached an interim deal with Indonesia. And so this is going on one front. And we also have some countries like Canada and India have put aside a diplomatic dispute, trying to work out things to get things better. Brazil is looking for new markets. So we've seen a lot of countries are recalibrating how they're thinking about trade. The EU is a huge bloc which is looking at doing it on various levels. We've seen it in countries, and we've seen it in sectors as well, ASEAN as well. So there is a shift going on. A lot of countries, trade blocs, are trying to de-risk from the United States, and this is one of the biggest impacts of the trade tariffs that Trump has imposed on many countries and many blocs around the world.
Bloomberg's John Herskovits, thank you so much for the latest on the Trump side of things. Well, speaking of, President Trump has threatened to impose stiff financial penalties on Russia if it does not end hostilities with Ukraine. Trump says the levies would come in the form of secondary tariffs at about 100% if a deal is not signed in 50 days. Joining us now is Tony Halpin, who leads our Russia economy and government coverage. Well, President Trump had been hinting that a big announcement on Russia was due. We got the announcement yesterday, but he's giving them a 50-day window. Does this entice Russia perhaps to come to the negotiating table?
Yes, I mean, this is a measure essentially aimed at targeting Russia's ability to finance its war by threatening tariffs against countries that purchase Russian oil and gas. But as you say, it's not entirely clear why there's a 50-day window until those measures kick in. President Trump said at the beginning that he was dissatisfied with Putin. He wasn't happy at the fact that after 6 months and 6 phone calls, there wasn't really any progress in Russia's willingness to observe a ceasefire. But he's delayed these measures now for another 50 days. And it's not entirely clear why he thinks a 50-day delay will bring Putin to the table any more quickly.
Yeah, but the other big announcement from the weekend is that President Trump is also open to the idea of allowing Ukraine to use those Patriot air defense system, the missiles, yesterday, although Europe will have to pay for them.
Right.
Is this a new template, do you think, in terms of how the U.S. offers military support to Ukraine?
Yes, I think so. I mean, the U.S. until now has been sort of invested in this war in supplying Ukraine with weapons to defend itself. And President Trump made clear yesterday that that's over and that in the future he'll sell weapons to European countries to supply Ukraine to help Ukraine defend itself. So in that case, in that scenario, Trump has stepped back a little bit. But at the same time, it was very important for Ukraine to have that commitment. They were very concerned that existing U.S. commitments were about to run out in the summer, and they didn't have an assurance that future U.S. weapons supplies were going to be there. Now at least they can be sure that if the Europeans will pay for them, they will get the weapons they need.
Yeah, so somewhat of a game changer, I guess, versus where we were a couple of months ago.
Yeah, I mean, Trump has changed the framework in which the US approaches this war, and he's still trying to encourage Putin to come to the table. So far, at least, we don't see any progress on that, but now we'll have to wait and see in these next 50 days.
Yeah, Tony, thank you so much. Tony Halpin leads our Russia economy and government coverage. Well, Israel has launched attacks in southern Syria after deadly clashes involving the Druze community. The Israeli army says it struck several tanks advancing towards al-Suwaida province, saying it's a clear warning to the Syrian regime that Israel will not allow the Druze to be harmed. The London-based Syrian Observatory for Human Rights says the clashes killed about 100 people. Syria's defense ministry says government troops were deployed in Suwaida to end the violence. And still ahead, markets are bracing for the weakest U.S. earnings season since mid-2023. Wealthbrix Capital Partners shares their outlook next. This is Bloomberg.
JP Morgan kicks off U.S. bank earnings, and investors will be watching closely for the health of the U.S. consumer. Federal Reserve data has shown that credit card balances have been slowing, and the question is whether JP Morgan and other big card providers will be able to generate more and more net interest income from a U.S. consumer that is seemingly fatigued from the U.S. tariff strategy. Now, Wall Street, on the other hand, there are a lot of bright spots. For example, mergers and acquisitions, they have been coming back in force. Will that continue through the end of the year is a big question for JP Morgan CEO Jamie Dimon, as well as the big investment banks. Goldman Sachs and Morgan Stanley, the three biggest investment banks, have been trading at or more of 2 times their book value. And as their stock has appreciated, investors are expecting them to benefit from deregulation as well as volatility in markets that will give trading desks a bigger windfall. The question is, which trading desks are winning more than others? And will the Main Street banks, for example, Bank of America, Wells Fargo, and Citigroup, which also have big investment banks, will they be benefiting from the U.S. consumer as well as some spending activity starts to slow? I'm Shanali Bassick in New York for Bloomberg Television.
Well, that's a preview of what to expect from America's biggest banks as we head into earnings season. It all kicks off today. For more on U.S. earnings and markets, let's bring in Anita Krishna Gupta, CIO at Wealthbrix Capital Partners. Always good to chat to you. Let's just start with where we are with markets. All-time highs for the NASDAQ and the S&P. Why do you think markets are trading so strong?
Good morning, Jumana. I think it's a combination of the fact that earnings expectations at this point are pretty positive. We've got a 4.8% year-on-year expectation for Q2 and S&P 500.
It's still the weakest going back to
It's absolutely, but it's going to beat. It always does by 3 to 4%. So when you're looking at, it'll probably end up somewhere between 7 to 8%. So I'm a bit surprised that the consensus is at 4.8. Also, you've still got tech, which is a very large part of earnings. The market is once again being driven by technology, though it's a broader rally. And as we just heard, banks have done surprisingly well, both in the US as well as UK, as well as the Eurozone, the UAE. Everywhere I've seen bank stocks up 25 to 30%. That's a reflection on the economy. So combination of bank earnings, economic growth, still positive.
In which part of the economy or financial markets are you getting tariff uncertainty pop up then?
In consumer discretionary, absolutely. So if you look at the performance of consumer discretionary globally in the US, it's the only sector that's negative year to date. Consumer discretionary also has the narrowest margins. So again, in comparison to technology, which has the highest margins, highest ROE, definitely we're seeing consumer discretionary lagging in almost every region that we look at.
Yeah. So how are you thinking about the macro implications of tariffs? And I ask that because, again, policymakers don't have clarity about how this is all going to play out. I think President Trump also doesn't have clarity about how this is all going to play out and whether we are going to see a significant inflation push in the second half of the year because of tariffs, because up until now it hasn't shown up. So the question is, what do you think it all actually means for the U.S. economy and how might policymakers respond? Is this the reason why the Fed are being cautious?
Absolutely, because in the first half of 2025, we really haven't seen any impact. It's only been talk.
Yeah.
In the second half is when we're actually going to see the implementation, probably 1st August. I don't think that deadline is going to be changed again. So when we actually see, and there are 3 ways it could impact. One is, of course, the U.S. consumer. He's going to have his orange juice and his cheese more expensive, probably. We're also going to have an impact on U.S. corporates. So the margins are pretty high at this point. They can take a 1 to 2% hit, but then that also affects demand. Thirdly, it's the smaller U.S. industry, the smaller U.S. corporate that's going to get affected. So in terms of the macro implications, today we've got U.S. CPI coming out. Now, even though it's a very small tick expected upwards month on month, but everything that goes up is not good for the consumer. It's not good for in terms of the Fed trying to decide whether or not to cut rates. You've got 2 members right now thinking, yes, let's do a cut next month. But it's inflation again, about macro.
Yeah. Do you think that's the reason why long-end bond yields have started rising? And it's not specific to the U.S. We were showing this earlier on the show.
Yes.
Pretty much everywhere. You've got U.S., Germany, France, JGBs, all of them are rising.
So absolutely, you've got the U.S. 30-year almost at 5%.
Yeah.
You've got the Japan, again, the long and 30 to 40-year at above 3%. Now, when we're looking at long and bond yields up that much, that means people are worried about fiscal deficits. They are worried about the economy. They are worried about U.S. debt, in the U.S. especially. So there are worries. So there's a divergence between how the bond markets are reacting to what's happening in the economies and how equities are reacting.
But do you think that it's a matter of correlation? You say they're concerned about the fiscal situation of these
Yes.
countries. I mean, Germany has a lot of fiscal room, and yet long-end bond yields have started to rise, even though the growth outlook is perhaps deteriorating on back of these tariffs. I wonder to what extent it's JGBs that are wagging the tail of the dog here.
JGBs are very...
As we get into the upper house election, obviously.
Yes, so absolutely. I don't think it's just the JGBs. I think each of the regions is behaving independently in terms of their own fiscal situation, in terms of the own economic outlook. So while Europe's had a great run in terms of equities, in terms of reducing rates, so that's been positive. But if you're looking at the longer term Eurozone outlook, it doesn't look that positive.
Yeah. So where are you deploying cash now? It seems like you still like the secular tech trade in the U.S.
Absolutely. So it's a combination of, and I don't want to sound boring, but the diversified portfolio this year is fabulous because you've got to be in crypto, you've got to be in equities, you've got to be across regions, emerging, developed. You've got to be, where we see some upside coming through now is in fixed income and credit. Both emerging market, we do expect that if the Fed starts cutting rates, yield should start falling. So it's a positive win. And where absolutely would continue, and I've said this for years, is you're never out of technology.
Yeah. So on the fixed income bit, you would buy fixed income then?
Absolutely,
here.
yes. We would be buying at this point. And again, emerging market debt with also a stronger currency. We are a little bit negative on the dollar still.
Yeah.
I think that's a positive in terms of EM hard currency and local currency debt.
Great to chat to you, Anita. Thank you so much for coming on. Anita Krishna Gupta, CIO at Wealthbrix Capital Partners. And coming up, gearing up for India, Tesla opens its first showroom in the country as it battles slowing sales elsewhere. We're live in Mumbai next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Tesla is opening its first showroom in India, the world's third largest auto market. The EV maker is looking for new markets to offset slowing sales in regions where it's already well established. Bloomberg's India Autos reporter Alisha Sachdev joins us from the new showroom in Mumbai. Alisha, I've got to say, I was a bit surprised to hear that it's taken this long for Tesla to actually open up a showroom in Mumbai. How significant is this, do you think?
It has indeed taken years and years of negotiations and stop-start conversations with India for Tesla to finally relent and be in this market. But it is making a bit of a cautious start in India. It's not the kind of big bang, full-fledged manufacturing announcement that the Indian government was hoping to win. And remember, for Prime Minister Narendra Modi, who has made Make in India the cornerstone of his industrial push in the country, this is going to be a less than satisfactory move, given that it comes after years and years of discussions. But Tesla is taking a bit of a soft landing with this market. What we have got is 2 experience centers that the brands opened up, one here in Mumbai right behind us and one in New Delhi, which comes up later this month. So what we will now have to see is how many customers, even the luxury ones, really bite and pay top dollar for Teslas, which will be significantly more expensive in India than they are in the US or Europe.
You know, one thing that also caught my attention is that this is a showroom. It's not a manufacturing hub. And so you could say that Tesla's taken a pretty much of a low-key approach to such a huge market like India. Why are they being cautious?
Well, India is a complex and competitive market for car makers. That is because most car makers in India manufacture locally, and the import tariffs make it impossible for large manufacturers to compete with those very competitive prices in the local market. What Tesla's decided to do is just gauge demand and the buzz that the brand is able to generate on its own. So it's really banking on the brand pull to do the initial bit of the work in India. It wants to see how many people actually walk into these experience centers first and how much the buzz actually generates to people buying the cars. The initial indications we have on pricing say that a Tesla Model Y could cost anywhere from about $70,000 US to $80,000 US for an extended range model, which is a completely different price bracket than what customers pay in the US. So that explains a bit of the measured approach that Tesla is taking for now.
And yet, EV penetration in India is only 5%. It's a very, very low proportion. Would you say that that is one of the biggest challenges that Tesla faces in capturing that market?
Absolutely. EVs are, like you pointed out, just about 5% of the Indian passenger vehicle market. And luxury cars, on top of that, is just about 1% of the 4 million unit passenger car market that we have in India. So the limitations that the high import tariffs are going to put on Tesla will really sort of end up restricting the customers that it can address at these price points. And that, is certainly one of the reasons that Tesla's deciding to sort of go slow. It is a complicated and uncertain market. The infrastructure for charging in India is also not very well developed at this point. And we know with Tesla, it is a very well developed supercharger network elsewhere in the world that really ticks for it.
Yeah, one of the challenges everywhere. Alicia Sachdev, well, hopefully the rain in Mumbai will be an auspicious start for the showroom. India Autos reporter in Mumbai, we appreciate you coming on the show, rain and all. And coming up, momentum is picking up behind Mozambique's massive LNG projects. More details on that next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Fighting back, the EU targets Boeing aircraft, cars, and bourbon in a list of countermeasures against U.S. tariffs, covering $84 billion in American goods. 50-day deadline. President Trump threatens 100% tariffs on Russia if Vladimir Putin fails to agree on a ceasefire deal with Ukraine by early September, while pledging fresh weapon supplies to Kyiv paid for by NATO allies. And in a surprising U.S. reversal, Nvidia says it will resume sales of its H20 AI chip to China after receiving assurances from Washington on export licenses. It's just gone 8:30 a.m. across the Emirates. I'm Joanna Bersacci in Dubai. A couple of stories, fresh ones this morning, apart from the fact that we're heading into earnings season. The big one that Nvidia may be looking to start supplying its key AI chips to China once again. We're going to dive into that story and what we know about it in a short while. But actually is a big driver for tech stocks. And you're seeing the NASDAQ futures this morning up about 0.3%, building on from yesterday's gains and the fact that we are at all-time all-time highs for both S&P and NASDAQ. So notable in light of all of the uncertainties that we've been tracking over the news the last couple of months on tariffs, geopolitics. That being said, we are at all-time highs for Wall Street. Big data point coming up today with the CPI. Expectation is it might be hotter than the last month's print, but that is priced in. So the question is how markets take it from here. Euro just shy of 117, about 0.1% firmer, though we're stalling around this level in anticipation of those tariffs, the tariff deadline on August the 1st, what that might mean for the European outlook and its growth prospects. And then Brent, you can see slipping a little bit this morning, $69 or just below, down about 0.5% on the fact that President Trump did not announce imminent sanctions or secondary sanctions on Russia. There's a 50-day window. Switching over, keeping a very close eye on what's been happening with yields all around the world. JGB yields keep moving higher as we head into the upper house elections this weekend. We're also seeing yields rise in Germany and in the U.S. too. So some key levels have been broken. You can see that 30-year yields in the U.S. basically at around 5% once again. So creeping higher, a big story for market participants as well as they keep an eye on tariff developments and the potential inflationary impact that those tariffs could have. But back to the other top story this morning. Nvidia says it expects to resume sales of its H20 artificial intelligence accelerator to China based on assurances from Washington that such shipments would be approved. The China-specific variant of Nvidia's AI chip was created to comply with earlier trade curbs, but has also been blocked since April from sale into China. Joining us now is Stephen Engel, Bloomberg's chief North Asia correspondent. Stephen, tell us more about this about face from the Trump administration.
Yeah, it's very interesting as well that it came from a blog post from Nvidia itself, not from the White House. So maybe I'll get into that a little bit later and why that was. But this is clearly a big victory for Nvidia CEO Jensen Huang, who, by the way, is in China right now. He'll be spending that week. And it also comes a week after he met Donald Trump in the White House. So obviously you can kind of read the tea leaves and see what was discussed with Trump and what message is Jensen Huang taking back to the Chinese leadership. But it's clearly a big victory for Nvidia because, as you rightfully said, that H20 chip, which was sort of a scaled down version of their most powerful AI accelerators that they specifically designed for China, and then essentially the Trump administration in April blocked them and added the H20 chip to the list of export controls. And Jensen Huang, who you see on the screen here, has been highly critical of these export controls as not working and also counterproductive because he feels it has given domestic chip makers like Huawei an unfair advantage if they're being blocked from selling these AI chips into China. And he's also indicated that the company could potentially lose $8 billion in sales because of those export controls in this current quarter. So much was at stake for Jensen Huang. So now we're hearing through various channels at Nvidia, as well as Jensen Huang speaking on state media in Beijing, essentially saying they can now, they've been given tacit approval by the White House to apply for those export licenses, and they will be approved. So momentarily, I would guess that those shipments will continue on the H20.
Yeah. What does this mean bigger picture, though, Stephen? Does it have any knock-on effects, any implications for those ongoing discussions between U.S. and China around tariffs and the tit-for-tat? Or can we read this as just a specific to Nvidia situation?
I think it shows give and take between China and the United States as they've had this truce now, the reaffirmation of the truce that was originally in May and then reaffirmed just a couple of weeks ago in London. And sure, the U.S. wants China to expedite the export licensing process for key rare earths and rare earth magnets, while China wants a relaxation of those export controls, particularly on AI chips. It looks like that was potentially tacitly acknowledged and agreed to by the White House. And that's why I think it's interesting that it was Nvidia and Jensen Huang who announced this, not Donald Trump beating his chest and saying, we got this victory here. It's either it is a victory as far as propelling the relationship forward for China and the U.S., but there could be potentially blowback for being soft on China. So let Jensen Huang announce it and go forward from here. So I think it is a key development in the rapprochement between China and the United States.
Yeah, well, let's see how long President Trump holds back on saying something about it. You know that he's going to want to say something. Yep. Let's see what he says later in the day. Stephen Engel, thank you so much. Great reporting. Bloomberg's chief North Asia correspondent. Now for a look at some of the other stories we're following. Fed Chair Jerome Powell has asked the central bank's Inspector General to review the $2.5 billion renovation of its Washington headquarters. Some Republicans and Trump appointees have criticized Powell for cost overruns around the refurbishment project. The president has also repeated his criticism of Powell for not cutting interest rates further. A sharply divided U.S. Supreme Court is allowing President Trump to continue dismantling the Education Department. It's lifting a lower court order that required the reinstatement of as many as 1,400 workers. The court's liberal justices dissented, warning that the decision threatens the Constitution. The ruling will apply while the case continues on appeal. Turning to Africa now, and 4 years after terrorist attacks halted a massive LNG project in Mozambique, momentum behind the $57 billion in export facilities is picking up again. Energy companies Total Energies and Eni have readied contractors and signed agreements for preliminary work on projects to add capacity. For more, Bloomberg's Ondiro Ganga joins us now from Kigali, Rwanda. So the work, the operations had been halted on back of those attacks a few years ago. What is giving these investors confidence once again to resume operations?
Hi, Joanna. So a big push from this is coming from the government. The president is insinuating that if we wait, we're going to wait forever. And he said that if Total doesn't lift the force majeure that it had placed in 2021, then it's likely to stay in place indefinitely because he says, and I quote, if we are waiting for Cabo Delgado to be heaven, then it's going to be a long time in waiting. So the government is saying that now is the time to go back, despite the fact that a couple of analysts are saying the risk is still imminent and renewed operations could trigger renewed attacks. And this is really important because, like you mentioned, in the intro, in 2021, there was a really deadly attack in the area. And this is one of the worst in the country to date. We saw some of these Islamist insurgents overrun the police, overrun the military, take over the town. Many people lost their life in a really brutal manner. And we saw the government enlist the help of SADC forces and also Rwandan troops. And even though SADC forces have left the country, Rwandan troops are still staying put. They're guarding the area, particularly the areas where the LNG project is. And the government has said that for as long as terrorism remains a threat, then Rwandan troops are going to remain, as if to offer some form of comfort to investors that they can resume with their operations. We've also seen Total that received some of financing from the U.S. Exim Bank. And the CEO, who was in Mozambique just a couple of days ago, says that the remaining hurdles are a question of paperwork.
Ondiro, talk to us about the significance of this LNG project and what it may actually mean for the Mozambique economy.
Significance is quite big, particularly before the terror attack happened. Now the stakes are really high, Jumana, because Mozambique is a country that will begin paying its $900 billion, million Eurobond come 2028. And they were expecting that they will get a lot of revenue consistently flowing from these energy projects. But unfortunately, due to the delays that we've seen, the project will only begin production in 2029. And this is a year after Mozambique is supposed to begin paying its Eurobond. This is also a country that was hit by post-election violence, which left a big dent on government revenue. And we've seen them struggle even to remain current on existing debt. They've reprofiled some of their domestic debt, and they're thinking of restructuring their bilateral debt. That is the current state of this country and the financial constraint that they're actually going through. On the other side, Total made a big investment, nearly $4 billion in acquiring stake for this project. And so far, they've not been able to turn profits over. In fact, they've just been plowing money into the project, and nothing is yet to come to life.
Bloomberg's Ondiro Ganga in Kigali, Rwanda. Thank you so much for the reporting. Now for a look at some of the other stories we're following. Tullow Oil and Gulf Energy have won an extension to submit a development plan for fields in Kenya. The extension until December is a crucial step to completing a sale of the assets. Tullow agreed to sell the oil deposits to the Nairobi-based trading firm in April after struggling for more than a decade to bring them on stream. Nigerian stocks have rallied to a record high as the bourse notched a 9th straight day of gains. The Lagos-based Nigerian all-share index rose 0.4% on Monday, extending its longest set of consecutive daily gains since March 24. The move is backed by an improving economic outlook for the West African nation, as cooler inflation readings stoke hopes for interest rate cuts later this year by the central bank. And coming up, startups in the Middle East nearly doubled their fundraising in the first half of the year. A closer look at what is shaping emerging venture markets with the CEO of Magnet, Phil Bahoshi, next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Startups in the Middle East nearly doubled their fundraising in the first half of this year, defying a wider slowdown in venture capital investment brought on by market volatility and investor caution. Data platform Magnet says VCs funneled more than $1.3 billion to companies in the Gulf from January to June, led by Saudi Arabia and the UAE. Joining us now is Magnet founder and CEO Philip Bahoshi. Good to have you with us. One of the top stories on the terminal today is one about European VCs and the fact that European markets are on track for their worst year in a decade as far as VCs are concerned. But yet the MENA region, per your data, is showing its strongest first half performance since 2022. Why the disparity in regions?
Great question. So we actually cover the emerging venture markets. And when you look at Africa, the Middle East and Southeast Asia, they've seen, similar to Europe, a decline in global regional funding. But the Middle East has very much been dominated by, as you already mentioned, Saudi Arabia and the UAE. They accounted for 85% of all the venture capital investment that took place here in the MENA region. And what you're seeing is that the government initiatives, whether it's the fund of funds, it's the policies that the ministries are putting into effect, are really coming into fruition. So it's really driven from the bottom up here.
So I'm interested to ask you about some of the other data points in the report. We had our colleague Laura Questa-Gardner come on the show a few weeks ago talking about how for some companies it's been really difficult to get Series B funding and that for founders they've been scrambling to complete those rounds. What is your data telling you about Series A and Series B appetite?
Absolutely. So she reached out and I gave some commentary around that. And that's one of the shifts that we saw this year. Last year, the story was all about early stage funding. Now we've seen Series A has grown 73% and Series B investments is in the triple digits of growth compared to years gone by. So it's really highlighting that investor appetite, specifically in the GCC, is growing to later stage companies compared to what we've seen in the last couple of years. Hence the record growth for the last 4 to 5 years. In fact, the most interesting thing from the report is both Q1 and Q2 were better performances than last year.
And how much of this strength can be traced back to sovereign capital that's going in to many of these companies?
We're actually going to do a report on this in the summer because we've seen that really it's the influence of many of those sovereign wealth funds and the fund of funds that they've funded that is really driving this. And you can say that a larger proportion of that, specifically here in the GCC, is driven by that. But that's no bad thing. That's really stimulating and growing the ecosystem. But an interesting point from the report that we just published, we've seen a 9% increase in investor participation in MENA-based companies, with 54% of those coming from outside of the region, the highest level of international participation. So while it's seeding the ecosystem, it's also attracting international capital.
Okay, so then you've got basically that money seeding. You've got more and more interest in, per your data, Series B. Does that mean that the size of the deals are getting bigger simply because the investment is coming in later on in the cycle?
Absolutely. So we saw a 94% increase in the total amount of capital, but actually conversely, we only saw a 5% increase in the total number of transactions. So it really is a shift away from earlier stage towards later stage. Having said that, in absolute numbers, you still see a flow at early stage. So you continue to see the bottom of the pyramid growing, but that shift in investor appetite has grown towards slightly later stage investment.
Two of the biggest deals this half of the year, or the first half of this year, the mega deals, you had Ninja's $250 million round, Tabby's $160 million round. What does that tell you about investor appetite? I guess it sort of plays into that idea that the rounds are getting bigger.
Not just that, it's that growth to exit. That appetite towards exit is growing. Many of these rounds, specifically in the GCC, are pre-IPO investment rounds. There's a lot of discussion around IPO listings here in the region. So it just shows the health of the capital availability here in the region has come back. Despite all the turmoil that we saw in the last couple of months, investor appetite in the region is continuing to grow.
What is the outlook for exits as we get into the second half of the year? We started off strong. Obviously, things started to subside. That's a global theme. How are things looking as we head into the end of 2025?
So data right now shows that the total number of M&A transactions is the same as the full year of last year. So that's extremely healthy. I do think that the volatility that you're seeing in the public markets, as well as the uncertainty, is creating a slight indecision. One of the things that we highlighted in the report is what we saw in Q2 is likely to only reflect in the numbers in Q3 and Q4, specifically in M&A and IPO uncertainty, because that's likely to impact the ability of companies to list and international acquirers' willingness to invest here in the region.
So can I just bring it back to the main geopolitical event of the last month, the Iran-Israel war? Could that dent the appetite to invest in these companies from an international perspective? And will that show up, if it does show up, in the data that's to come?
From my perspective, I don't think it's going to help, but at the same time, we've seen that the investor appetite internationally has continued to grow. Those interested in the region can point to President Trump's visit to the region and his confidence in the UAE, GCC, Saudi Arabia, and events like that will only strengthen and embolden international investors to the region, but it does create uncertainty and a level of indecision for immediate action.
Yeah, which is reflected, honestly, globally, with the amount of tariff uncertainty there is. Phil, thank you so much for coming on. Philip Bahoshi, Magnet founder and CEO. Coming up, Saudi Arabia's ambitious plan for the futuristic city, The Line, to go under review. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Saudi Arabia has asked consulting firms to conduct a strategic review of its plans for building Neom's development project, The Line. It comes as the kingdom seeks to recalibrate projects under its Vision 2030 plan. Joining us now is Bloomberg's Abir Abu Amar. Abir, okay, before we talk about the report, maybe just to remind viewers what exactly The Line is. What is The Line?
Yeah, so good morning, Joanna. Let's talk about The Line, right? The Line is this multi-billion-dollar project. It's a city, a modern urban city within the Neom project. It's meant to be in the desert. It's a linear city that is clad between two mirrored walls. The original plan for it was supposed to be 170 kilometers, but as you know, Bloomberg News reported last year that that plan, has come with downsizing now. So we don't know exactly what The Line is going to end up looking like, the length of it, the width of it, how it's going to come up. But we know that there have been downsizing measures for The Line, but essentially it's this urban, futuristic city that Neom is building, obviously originated by the PIF.
Yeah, so in your article, you talk about Saudi Arabia asking consulting firms to conduct a strategic review of their plans. What does that mean exactly?
Right. So we've spoken to multiple people, and what we understand is that an RFP has been sent to consulting firms that have been looking at the project for the past, 7-8 years. And essentially what we know is this RFP, the conclusion of it could take months, it could take weeks based on historical RFPs that have been sent out on other giga projects. We don't know what the outcome of it is going to be, but based on the multiple sources that we've spoken to, Neom has commissioned this RFP to look at the feasibility of The Line as it currently stands. One big element, Jumana, that Neom is asking for is to look at commercializing aspects of the city and how it could turn into something that makes business sense. So we don't know what the outcome is. We don't know what it's going to come up to be. Could be downsizing, maybe. Could be taking a different shape, maybe. But, we'll have to wait and report on that.
And how does this sort of play into the macro backdrop right now in Saudi Arabia? We've written a lot recently and spoken a lot about Saudi's public finances. The finance minister has said that they're running a deficit by design. how does this project get reflected in the macro dynamics?
Right. So 2 words here, rationalization and prioritization, which are 2 words that Saudi officials have been using, 2 words that Saudi officials have been encouraged to do. Look, this is not necessarily a bad news story, right? Saudi has been encouraged by the IMF, by other institutions, by economists to rationalize spending on giga projects. Now, they've certainly, cut spending within the budget. Saudi, as you know, is going to run budget deficits well into the end of the decade. So this falls under their strategy to prioritize, which is what Minister Mohammed Al-Jadaan said in late 2023 about looking as a whole at Vision 2030 projects and prioritizing which ones need imminent spending, which ones could use a delay. So again, not necessarily a negative story. This is what the Saudis have been encouraged to do in terms of looking at, the spectrum of the trillion-dollar giga projects.
Abir, thank you so much for the reporting. That was Bloomberg's Abir Abu Hamad, and the full article is up on the terminal if you want to get insights into that full report. Okay, let's check in on markets. A couple of major news drivers this morning. One of the newsier bits, I would say, is the fact that Nvidia seem like they're going to be on track to restart selling their AI accelerator chips back into China again. So a bit of an about face from the Trump administration on that front. The Nasdaq, you can see, up 0.3%. So good news for Nvidia, tech stocks, and all of these indices, S&P and the Nasdaq, at all-time highs as we head into the earnings season. European markets also seeing a bit of a boost this morning, up 0.3% as we talk about the EU preparing a list of tariffs, countermeasures on back of the tariff letter that the Trump administration sent them over the weekend. So all of that to watch out for. The big data event today is going to be US CPI. That is it for Horizons Middle East and Africa. I'm Joanna Bersetti in Dubai. Stay with us for Daybreak Europe with Tom McKenzie. This is Bloomberg.